Hello again and welcome back to RegalX Trading Academy video courses. My name is Daniel Garcia and I'm your instructor for this video course series. Today in course number 4 of the advanced material, we want to talk about trading strategies. What you will learn in this video is a brief insight into the most popular trading strategies. We will touch on a few trading strategies, also on multi-indicator strategies. How you can combine several strategies together in order to find your approach, whether it fits you or not, because there is no one answer when it comes to the best trading strategies. Really? Why not? Because strategies are in many ways suited to the person who's actually executing them. It means you need to make sure that you are in consideration with your own personality, your own traits, your strength, your own weaknesses. Basically, someone who does something very well. It could be because he's very calm or very seated, while somebody else might trade something very fast, very quickly. The other guy would never even know how to lose orientation completely. So the most important point is to experiment so you can discover the strategy that actually suits you. And also, of course, remove the strategies that do not suit you. So one of the most key aspects in trading are the time frame, meaning what time frame am I looking at? For example, right now I'm looking on a daily time frame. So each candle is a single day. But if I want to go really, really fast, then that is called scalping. Scalping is the very fast trading, meaning I'm in and out for a couple of pips, really. And the most important thing when you do scalping is that you consider trading costs, that you have low spreads, because if you're shooting for, let's just say 3 pips, trade profits, and if you trade a currency paired, it has a spread bigger than that, then you will not be able to make consistent profits. So it's very important that you consider in scalping also that speed and execution plays a big role. Meaning if you try to scalp over a news event, you're likely not to succeed because you're going to receive slippage on your trade. Meaning you will not get the exact price executed that you will open or close for. Simply because there's so much going on in the market and the volatility makes it impossible for you to get that trade. So the next thing that we can do, for example, if we go a little higher, is so-called day trading. If we look at day trading down, we look at long time frames that are larger. You can do the 15 minutes, you can do the 30 minutes. For example, if you look at that, the point of day trading is that you're usually out the very same day. That's why it's called day trading. So you are out of day trading. You are out of the trading within the same day. So you do not have any risk overnight. If the market gets a big news, for example, when we first saw the first tariff talks happen a few months back, the Turkish lira for some reason went through the roof. It went through the roof in a negative way. It moved in minutes. It usually doesn't even move in weeks. Also very fast, very extreme, strong movement. So these things might happen overnight. So in order to protect yourself, you want to be flat overnight. You don't want to have overnight risk. So day trading strategies, they are looking at what can be done over the course of the day. And looks like the average true range helps you to gauge what is a daily range. That could make sense for me. So today we had the NFP, for example, which you see got the euro a little bit stronger, made the dollar weaker, but at the same time we see the euro did not extend against the average true range. So seasoned day traders would probably take profits here and see how the markets close down. So if there were long or actually speculate on a market not breaking out here, going into the trade with a sell position right around the daily average range and come back and be flat before the end of the day. Then if you go even bigger, what you can do is what's called swing trading. Swing trading is trying to capture moves that are over the course of several days. Maybe could be hours, could be days. Really depends on the swing that you're seeing. Let's have a look at some other pair that has been going more in. Wait a second. Yeah, maybe here. Okay. So you can see when the pound came down all the way to the 130, 40. So you try to capture more swings like that. So basically, the market overextended itself in shorts, and the pound was running a lot through the top to the downside here. And if you look at it technically, there were still some bigger support around this market here. Or actually, we saw the same even in the euro. When you look at it that way, let's have a look. We also have this resistance where we are right now. So that's why there needs to be like more decisive power to happen. And this down here to 115, that's even a bigger support, because that's the support that has held over years. So you're trying to capture waves like that and something that's called swing trading. And usually your trades can last for a couple of days. And then there's also position trading. Position trading is called really long-term trading. So you can see 2014, the euro came down all the way down, and then maybe some people bought at 105, and now we're 117, and we're even at 125 at some point, or even when we had the Brexit happen, and then saw also the as you see it here. In fact, when we had the flash crash in fall 2016, but then we had a 30-year low and more, so low that you really need to question the stability of England itself, to not bet on the price to come back up here. And position trading would be something like that, saying, all right, I'm taking the low here somewhere in September 16th, and you catching like a move up here, like here, which is, as you can see here, 2,200, almost 2,300 pips. So those are like long-term trades that you can make. And what people like to do is combine both, so you have some longer-term trades in the back and you do some daily stuff. Why would you do that? And you do it in order to experiment. And there is an abundance of strategies that you can try out where you can combine different indicators. For example, let's look at the Bollinger MACD here. Very simple rule set. You have the MACD here, which shows you whether the market is rather in a buy or in a sell. And you have the Bollinger Bands here across the pricing. And you see we have an upper band, a middle band, and a lower band, lower round, and they are all sorts of moving averages. What you can do when you combine, when you say, all right, if the MACD is above 0, I will only buy. So when the market comes down and the MACD is above 0 and it touches the lower edge, you would go buy. So that's a counter band strategy, and if the trade works out, you bounce off that line. You go back and you take your profit either at the midline, or if you're like very adventurous, you can also take it at the opposite line. You can combine, or you can do it here. For example, the MACD went below and then touch the middle line here, although it was a sub-zero. So then you go short and you take the profits again on a middle line. So this is how you can combine and look. I mean, I can show you a few other profiles that were on here. There's strategies you can trade on a 5-minute time frame. There's one, this one was a 51. Here also you have different moving averages and these trend flat indicators. For example, there's so many indicators that you can really try out and find out whatever you want. And they're so easy to implement as well. It's really just copying a file into a folder, and there you are in, and can just go straight, shoot, and try it out. What else do we have? We have the RSI, for example, combined. Also here on a 5-minute time frame. Just needs to load up a little bit, because a little bit more intensive on, or intense on the power, it needs to load up. But once it's there, it works out nicely. This one, for example, works on a 5-minute time frame. So there's many, many ways to combine, and we actually invite you to try things out, to see how does it really work with me? How can I do short-term strategies? Can I do long-term strategies? Am I patient? Am I, there's so many ways to look at it. So here we are. You can see the strategy has a number of regions here and down here, and really the outer edge is the buy or sell signal in combination with this indicator down here, whether it's red or blue. And there's also a different rule set to that. And you can see here, like I said, there's so many things you can try out, and you can find your own solution, whether it works for you, whether you can understand the rule set, whether you have enough traits that hit. Maybe the pound is not the right market for the strategy. Maybe pound generally is not your type of market. You want to look at the euro dollar, or maybe more into the emerging markets like the Australian dollar. Or maybe you want to trade indices, rather DAX or the S&P 500, Dow Jones, so there's so many variables in the system that the best thing you can do is really come inside, try it out, and get really know the abundance of possibilities that are waiting for you to be tested out. So we will very surely make another round of videos here where we go more deeper into each and every strategy of the possibilities there are. This is our video number 4, and in the next video we will talk about managing risk. How do I understand and identify and try to control risk? See you in the next video. Until we meet again, have a great day.